Bitcoin just closed at its highest close in over 543 days. It has nearly completely wiped out all of the losses that occurred over 18 months ago in May of 2022 when CeFi and DeFi collapsed. This is sending very strong signals to the market, showing the market, stating that the fears of the past are no longer. The price is reacting and overcoming the fears and the problems that happened in the past. And so now we're starting to see these pump effects flow out into the rest of the crypto space, into the altcoin space. And this is even causing some of the major charts that we follow to break out into new fresh highs. You guessed it, the total is finally breaking out into new fresh highs. Not only that, we are seeing some very, very strong signs for the SP, for the Nasdaq coming through just in the last 24 hours with the news that the federal funds rate has paused yet again. Now, we got a ton to get through in this video. The bullish thesis continues to play on when the bears are at their most worst, their most extreme point in the market. This is the most difficult time for many traders as they were expecting the markets to collapse. But we are seeing those signs that the market is rebounding yet again. Now, we've got a lot to get through. It's still early days, so some of these signals may not in fact turn out. However, there are some good signs, and I want to get through that in today's video. After you hit that like and subscribe button, hopefully we have more than 7% female following the crypto and finance channels. Now, we'll get into those data points in future videos, but you guys know what you need to do. Link in the top of the video description if you want more info on trading the cycle, learning how to trade crypto, and of course, the major stock markets and real estate markets. As for some of the short-term stuff, these guys are crushing the gains as the markets continue up, learning how to trade in these difficult times. So when the markets get easier, the gains come through nice and fast, nice and easy because they've put in the work over the difficult periods. Now, you can get an access to our free Discord using that link in the top of the video description for your name and email address onto that email list. And once a week, we send out our crypto and economic report as long as you're getting that access to the free Discord as well. So first things first, the news overnight, well, the Fed has paused rates again. Last time we saw the rates pause was the September meeting, and prior to that was July, where it went up 0.25%. So we're really starting to round out at this top price here for the interest rates. This, of course, will lead many to fear that they're just waiting now before it starts to turn down, and that's when the collapse happens, or it goes up again and they get fearful that no one can afford anything and all of the same news will cycle through again. Now, I just want to show you some of the data from the previous 18.6 year cycle that peaked out roughly 2006 for the land and then obviously 2007 for the stock market. The interest rates paused for many, many months. You can see that the first pause happened just after June 2006, and then there was August, September, you get it, all the way through until we got to the peak of August 2007. So basically a year, the interest rates stayed at the same level. Then they started to roll over, and the market also rolled over at that point. So it doesn't mean that the market will collapse if the interest rates come down. Not at all. There has been many times in the past, in particular the 1990s, which is back here, and the 2000s, where the interest rates went sideways, they went down, and they also went up, but the market kept going up. So it doesn't mean that as soon as the interest rates drop, they get cut, the market has to collapse. That's completely incorrect, but it's spouted out there in the finance news space. It is incorrect. Let's move on to the charts. And following on from yesterday's video, the last couple of videos where we looked at the bottom for the SP500 and for the Nasdaq, and then a forward look for November, last night's movement, or yesterday for the US guys, the movement in the S&P has now closed above key support and resistance levels for the move to the upside. Now, the shortest time frame, or the shortest price point, I should say, that we're looking at was 4,206. That was that small 50% level, and that's where it was topping out yesterday. The market has burst through that. It's also burst through the October swing lows, which was a very strong support level before we had that nice big rally, and then again just before it broke down. So the interesting thing here is that we spent a few closes underneath this level, so this nice straight 4,200 point level, which was all previous resistance in the past as well. And now we see the market do 3 straight green days to the upside, and potentially even a 4th day now, with the market just breaking above yesterday's high. So we have the we do have 4 days up, 4 higher highs, but yet to be seen if we get 4 higher closes because we're waiting on today's to finish, which has only just begun. So we can confirm that there is 3 up days, and TIA Premium members understand what that means and the importance of that. So the next price points that we're looking at are to the 50% upside. We've cleared this level. We need a few more closes above here, but we're looking at 42.76. You can see I've got my alert sitting up here and above this swing top. So it comes out roughly at that high 4,200 level. Then we aim for the next swing tops, which are sitting around 4,400. So there are some good early signs here that the market is bottoming, and we're now back at the price points where it was in early October. So the closer we try and get to the turns, the more difficult it is. Always remember that. And there's a higher chance of being incorrect, or basically the market turning against you. But at least we're seeing some of those signals now that we want to see at the lows. The same sort of thing is happening in the Nasdaq. It's just climbed back above those October lows and the August low. So it did break down for those few days there, nice volume, and it's broken back above as well. It's coming up to the first 50% level here from the October swing top, 14,800. And then we can look to the next 50% levels all the way up to the peak high here at 15,100. So this doesn't change the fact that this could take an extended time to get back to fresh highs, which would mean breaking past 16,062. But it does look like a positive start to this move, this seasonal move where the markets, US being the S&P and Nasdaq here, will potentially continue to hold these lows and put in some fresh highs over the coming couple of months. It doesn't mean that the final low is in, but like we've talked about for the last couple of months, you can see that the bottom pattern is forming and the price is now at the same price or even slightly higher than where it was in August, which is about 2.5 months ago now. So although there's been extreme fear, the bears are out telling us the markets are going to collapse, we're in this second bear market coming through, the fears of recession, all this sort of stuff, the facts, the data on the charts are saying otherwise. It looks like they are really trying to bottom at this point, and they're showing us some early signs that there is the possibility that this could be the low. So having a look at the previous big low, just as a slight confirmation here, how it happened last time in this cycle low, the bear market cycle. You had June 2022, then you could see the market push just under that June low. Didn't stay under there too long, came back above, tested again with a higher low, then another higher low, and then of course another higher low as well. So that's how you started to see that form. So if we do see that, those higher lows begin to form, even if it breaks back under these levels, but higher lows form, that's going to be a good sign that the market is trying to bottom. Same sort of thing happened for the S&P. Look at that low there. September, October came under and quickly went back above, higher low, higher low, higher low, higher low. Guess what? Potentially the next higher low, which is all great news for Bitcoin and cryptos as we're seeing the pump come through on Bitcoin, breaking to fresh highs here, 35,500. And some of this is flowing over into very select few altcoins, which is leading many to believe we're here for the next altcoin season and it's all going to pump. Everyone's going to be safe again, and they're going to get their bags filled up again. I'm here to tell you, at least to pop that bubble, that's not the case for all altcoins, and I know some people can get very sad or triggered. You can go to the comment section and let out the steam down there. That's what it's there for. But unfortunately, we have to follow the charts, not our emotions, not our feelings that this crypto is going to be the next big thing and take off to the moon, all that sort of, I don't know, 15-year-old drama. I don't know why 30-year-olds and 40-year-olds get involved in that. It's mental. Anywho, back to the chart. 543 days for Bitcoin in terms of its highest close in that period. It has broken past. We need another couple of days close here. We've got one firm one, and the day before was okay, but it's above the 50% level from the all-time high. All-time high, $69,000. Halfway, 34,500. Hopefully you guys can do your maths. Divide 69 by 2 gives you the half there at 34. And you can see how strong that level has been holding up the market. Remember, this thing came at it like, I don't know, a sumo wrestler coming at some skinny guy. It came at it super hard, and the skinny guy held off the sumo for a few days here. Now the sumo has broken through. We've got to see if it's going to crush the skinny guy here on the ground and hold this level. But this is how important that 50% has been, and the market is really testing it. Now to the upside, with some of these gains flowing out into cryptos, which we'll get to in a moment. Looking to the next levels that we potentially see some resistance at, you can see these levels here at roughly the high 30,000s, around 36, to $38,000 because they were previous support levels during that rally where the market basically failed from that point. Basically where Bitcoin failed in its first lower swing top, monthly swing top. That was the rally that held it up here at roughly $37,000, $38,000, and then it collapsed to that point. So that's why that level is looking like a significant level that it also needs to break through before it can test those tops, and of course the 42,200 level, which is the other 50% from the all-time high to the cycle low, which is roughly $15,000. We'll continue to follow up with the resistance levels over the coming days and weeks, of course, as the market action progresses. This is essentially what has happened, unfortunately, to many traders who have been in the market following the bearish narrative. At the lows, they weren't buying, they were waiting for 15,000, 12,000, 9,000. Market pumps up, comes back, and they think they're in the game again, waiting for their $9,000 or $10,000 Bitcoin that we heard so many times from so many different people, 12,000, 15, 18. Even the macro bears were hoping for a bigger collapse here, down to those levels again, the 20,000. But we stuck by the analysis saying that it was highly unlikely that we would see a breakdown of the March low at 19,500 based on the technicals, based on the pattern, based on the market sentiment, and based on the fundamentals that happened at that time. So without understanding that, many have fallen for the trap yet again of hoping for lower prices. So what we've seen in the market is a breakout now, and we could possibly say that 25K, these lows here, won't be seen again in this cycle. I still want to see a little bit more close and a little bit more strength here at the 30,000s, but it's possible that we won't see underneath $25,000 again in this cycle. I'll do future videos on that as well because it's a very interesting and important topic to come back to, because at the end of the day, we're trading price action here, and many are just hoping and waiting for certain prices based on nothing else. And what we've seen over the last several weeks, we've still seen bad news in the economy, bad news throughout the world. Wars have started in this period. Bitcoin has obviously gone up, and it looks like the stock markets are also starting to come through again, even though wars had begun in that period of October there, the first week of October, late in the week. And so the market has basically come back to that point when those wars broke out. So we're not going to get into the political side of it, but you have to ask yourself now, what else has to go wrong in the world for these markets to drop? It's a very dark question, and we're looking at things that we wouldn't want to see happen. But something very, very wrong, I think, would have to happen to dump these markets below previous support levels, because they've basically shown the resilience over the last several weeks, or in the case of Bitcoin now, nearly the last 12 months, coming out of that low, coming out of the FTX collapse, the CeFi and DeFi collapses, the Luna collapses, the banking crisis. There has been so much bad thrown at the markets, Bitcoin, the stock markets, S&P and the Nasdaq, that you'd have to wonder what would have to happen. Some black swan event that I don't know if anyone could think of. Could even another pandemic crash these markets back to the cycle low? I don't think so, because the market has already seen a pandemic, and it would know how the market responds to that, and they know how the Fed or the governments would potentially respond to that. There is the real possibility that these markets are going to start heading up again, of course, into 2024, 2025, which is what we're looking at here with the macro cycle. But that's the main question I want to throw at you today. If you are waiting for these lower prices, and we see all that fear porn coming through telling us that the markets are going to collapse and it's over, get your money out of US dollars and go and buy gold, the markets are telling you otherwise. So focus on the facts, stick with the charts, and they will keep you safe. Following on from the breaking point here on Bitcoin, we're seeing a fresh breakout on total. So that's the total cryptocurrency market cap, just beginning to break through 1.26 trillion, now touching 1.28 trillion. So that was the previous high. We had just a few days ago, it just broke slightly higher, but now we've got a nice clean break on one daily close above those levels there. So you can see they're at 1.28. What does that mean to the overall game? Well, it's possible that we are breaking out again of the previous accumulation zones and working our way up into more reaccumulation zones higher up, which means the rest of the market would potentially follow through. We had the final capitulation zone back around June and November of 2022. You can see the market bottoming and then basically making its way higher, bouncing very nicely off 50% here at 993 billion, call it $1 trillion for a round number. And then of course from there, the rest is history. So that leads us to the cryptocurrencies, the degen space where everyone thinks they're going to make their 100x's. And although this market is heading up, we still have some resistance levels above 400 billion, currently sitting at 370 billion using all of the cryptos and stablecoins minus Bitcoin and ETH, of course. So there is still some resistance to the upside. However, there are a few that are breaking out of the trend, and your old faithful here is Solana. So I just want to put a couple of cautions and warnings, and I might do a separate video of this in general so that you can get an understanding of the severity of jumping into cryptos when they are pumping, especially in the early stages. Now, if you have followed, hitting that like and subscribe button so that you can follow up on how all this comes together so you can make your 100x's from the market, any of that sort of jargon. Then hopefully you'll see that this is potentially some of those early stages where the stronger cryptos are giving you signs of which ones are going to be stronger into the next cycle and which ones are going to be weaker. Does that mean you have to jump on board now? Well, depends how patient you are. Look at the previous cycles. Now this happens in every single crypto. We can't determine right now how far up this market's going to pump or how far down it's going to come before the mega altcoin season, but this was the first alt season in 2020 that went from May to August with the DeFi run. Solana versus USD went up 1,000%. So basically 10x there, 50 cents to $5, but it also declined 80% again against USD. Against Bitcoin, it came all the way back plus some. So this is Solana versus BTC in that same period. There's May, there's August. It ran up, I think, roughly 600%. So it did a bigger gain than BTC. But over the following 16 weeks, as I'm on a weekly chart here, so that's roughly 3.5, 4 months, it gave all of those gains back against BTC. Keep that in mind if you're looking to get into altcoins now as they start to pump up, because Solana could go to $80 again. Keep in mind, if Solana was to do something that it did last time, running 10x, going from 50 cents to $5 and then back down 80 cents, that would look something like $8 to $80, and then a rundown of 80% brings us back to roughly 16 or so dollars. Still higher than the previous low against the USD value, of course, but then you have to factor in, well, what is Bitcoin going to be doing in that 4-month period? And so this period here, you've got 4 months on the decline, you've got 4 months on the incline, so a nice balancing there of time, 4 months up, 4 months down. Then you look at the USD, maybe it is possible that Solana does run up there, so you've got some pretty good trades ahead of you, which is why I suggest taking a look at TIA Crypto, look at the premium spots here and get on board with the traders here to make the gains to the upside. But I suspect that we will probably be going for a downside move again on Solana after we finally see some sort of peak here. In terms of the timing, Solana's up about 21 weeks from the June low and about 44 weeks from the December low. So you've got that sort of 4 or 5 months already happened from the June low. So let's take a look at whether Solana can get past 13,000 here, or 130,000 Satoshis, if it can break higher to bring the Sol USD price up to around $80. And from that point, that suckered in all of the late players. It'll probably come back and test some of these previous highs, coming back down to 40, maybe back down to the $30 price point, and potentially back into this previous accumulation zone for the next few months over 2024, over that period of 2024, before we see a mega altcoin season, I think, taking off sometime late 2024, just based on the time cycles themselves. So what does that mean? Essentially, it looks like we'll have a reasonable run for the strong altcoins, and the rest of them will probably run as well, but they won't run as well as some of the strong looking altcoins. But then I would expect a pullback, a pretty significant pullback from wherever the market does top out on. Solana is just one example. You probably have a few others there, but make sure you're always comparing them to the Bitcoin value, because like what happened with Solana in the previous first pump, came all the way back, gave back all of the gains, and then it went on its mega run. And that's the mega run that I'm waiting for. I'm waiting for this one here, and I think that is due to start the second half of 2024, maybe early into 2025. Like and subscribe, link in the top of the video description for TI Crypto. Join us for our weekly free crypto and economic report. Videos are popping up here on your left-hand side, and I'll see you guys at the next video. Stay tuned for that, and until then, take care and peace out.